This video presents an overview of U.S. and global capital markets. First, we'll introduce the financial system. Then we'll look at new issuance of securities in the financial system. Then we'll look at the various markets and the amount of trading in those markets. And then finally at who the users and suppliers of capital are. This graphic depicts the financial system. On the left-hand side are suppliers of capital, individuals and businesses. And on the right-hand side are users of capital, like individuals to buy durables, businesses to invest in plant and equipment, and governments. Users meet suppliers in the financial markets, and we divide those up into money markets and capital markets. And they usually interact in the markets using financial intermediaries. And some examples of intermediaries are banks and thrifts, investment banks, pension, mutual, and hedge funds, and insurance companies. So first, let's look at issuance. Who uses capital and how much? Here's the dollar value of issuance of new securities in U.S. capital markets. On the y-axis, trillions of dollars. So if you look at 2019, the bar on the far right, the government is the biggest issuer. That's the blue part at the bottom of the bar. And then mortgage and asset-backed securities is the rust-colored bar. And then we see corporate debt is the gray piece, and then corporate equity, the little yellow piece at top. So what do we learn from this? That government is the biggest issuer of securities in the capital market, way bigger than corporations. And that equity is a relatively small source of capital, smaller than corporate debt. If we just focus on common equity issuance, it's a relatively small amount of money. If you look on the y-axis, we're looking at billions of dollars here, and in peak years, well under $300 billion. What this graph does is divide the issuance of common equity up into two subgroups. IPOs, which are initial public offerings, that's the small green bar at the bottom, and then all subsequent issuance, which are called follow-ons. So this is equity securities issued by companies that have already issued securities once before. The takeaways here are that IPOs are a really small percentage of common equity issuance. In fact, there were only 197 initial public offerings in the U.S. in 2018. Now let's look at value of securities outstanding at the end of each year. On the y-axis, again, you're looking at trillions of dollars. So in 2017-2018, there were almost $90 trillion of securities outstanding in the U.S. capital markets. The light blue bar at the bottom is corporate equities. The rust-colored portion is corporate bonds, the gray mortgage and asset-backed securities. Then the yellow is government bonds, and at the very, very top, the dark blue is money markets. So the takeaways here are that equity is the biggest class of securities by value outstanding, government bonds second, and this is the reverse of the ranking that we saw with new issuance. This slide presents an international comparison of corporate finance. The four bars represent four different geographic areas. On the far left, the United States, then Europe, Japan, and China. And each bar shows the proportional breakdown of how companies obtain capital. In the U.S., at the bottom, we see the dark green is the share attributable to bank loans. The light green is other financing. The dark blue is equity market financing, and then the light blue is the corporate bond market. What we notice is that U.S. companies rely on the capital markets, that is, both equity and debt markets, for a greater proportion of their total funding than do companies in the European Union, Japan, or China, which rely much more so on bank funding. And this distinction holds true for the entire Anglosphere. Britain, Australia, Canada, and the U.S. all share this higher degree of reliance on capital markets than on bank financing. Now let's look at markets and trading. This graph shows the average daily trading volume in the U.S. for various securities. On the y-axis, we see billions of dollars. If you just look at the 2019 bar at the bottom, in blue is government bonds, then the rust color is mortgage-backed securities and asset-backed securities. Then we see the little gray sliver is corporate bonds, and the yellow is corporate equities. So the takeaways here are that in terms of daily trading volume, government bonds are the biggest category by far, way bigger than corporate debt, which has very little active secondary market trading. But we have to keep in mind that the price of bonds is far larger than the price of stocks. We often see bonds with a face value of $1 million. So what is also true is that the number of shares that are traded is far bigger than the number of bonds. Now let's look at equity markets and global equity market capitalization. This is the total value of shares listed on exchanges at the end of 2019. And the total for the entire planet is $75 trillion. The two big things to notice in this pie graph is the green slice, which is the US, which is enormous, and the tiny little blue sliver at the top, which is Canada. China is just to the right of Canada and still only represents 8% of stock market capitalization. The takeaways here are that the US is a huge fraction of global equity markets and that Canada is really small. Now let's look at global derivative markets. So this is what's called the notional principal value outstanding of all derivative securities at the end of 2019 in trillions of dollars. So the total is $690 trillion. And exchange-traded derivatives represent only $95 trillion, while over-the-counter traded derivatives are much, much larger. The key takeaways here are the notional value of derivatives outstanding dwarfs the size of the stock and bond market. Global stock market capitalization, as I just mentioned, is $75 trillion. In the same year, global bonds outstanding were just $100 trillion. So the global derivative markets are mind-bogglingly large. Now let's look at users and suppliers in U.S. capital markets. This slide presents a snapshot of users and suppliers of capital in the U.S. bond market. So on the left-hand pie graph, we see U.S. bond issuers. So these are users of capital. And the biggest slice is the dark green slice, the federal government. But we also see agencies and government-sponsored entities. And then we could add in state and local governments as well. So a really big proportion is government. Non-financial corporations only constitute 14% of U.S. bond market issuers. Who holds bonds? Well, that's shown on the right-hand pie graph. Households in nonprofits only constitute 10% of the direct holders of U.S. bonds. So bond markets aren't really a retail market. Retail investors don't invest directly in bonds. They'll do that through mutual funds and retirement accounts. And so you can see that those constitute 25% of U.S. bondholders. This graphic shows suppliers and users of capital in the U.S. equity markets. On the left-hand side, we see issuers in the U.S. equity market. The largest share are publicly traded corporations, which constitute about 70% of the market. On the right-hand side, we see the breakdown of suppliers of capital into the U.S. equity markets. And the big share here on the right-hand side are households and nonprofits, almost 40%. So the U.S. equity markets are much more of a retail market. And then on the left-hand side, individual households also invest indirectly into the U.S. stock markets through mutual funds and exchange-traded funds. Finally, let's look at what's going on in 2020. This is a graph of individual investors' estimated share of U.S. equities trading volume And we can see on the far right the share for the first half of 2020. You can see that the individual investors' estimated share has hovered around 15%, and it spiked to close to 20% in 2020. So there's been a big increase in household share of equity trading in 2020. And why is this the case? Well, it's the pandemic lockdown. There's been an advent of free trading apps like Robinhood that allow individuals to trade with no commissions. We've had a fantastic bull market since the March crash. And finally, with the lockdown, investors have lots of time to spare. And that concludes this overview of capital markets.